Gold just hit an all-time high of $3,228 per ounce, and it's not just inflation. From global instability to central banks dumping dollars, this surge could just be the beginning. What's up everyone, I'm Robert. Welcome back to The Alternative Investor. Today we're talking gold, and why it's become one of the best performing assets of 2025. With inflation expectations spiking, geopolitical risks intensifying, and trust in fiat currencies weakening, gold is back in the spotlight. We'll break down what's fueling this rally, where prices could go next, and how you can invest, whether you're in it for security or upside. As of April 15, 2025, gold is trading at $3,228.35 per ounce, which marks a new all-time high for the precious metal. This price represents a gain of over 22% year-to-date, making gold one of the best-performing major assets so far this year. In recent trading, gold even reached an intraday high of $3,245.42. This surge isn't a fluke. It reflects a broad-based move into gold by both retail and institutional investors, driven by macroeconomic uncertainty and a growing distrust in fiat-based monetary systems. Why gold is exploding right now? 1. Sticky inflation. Recent inflation data shows that price pressures are far from over. The University of Michigan's one-year inflation expectation just climbed to 6.7%, which is the highest level since 1981. Meanwhile, 5-year inflation expectations also ticked up to 4.4%, suggesting consumers are starting to believe inflation will remain elevated over the long term. These kinds of inflation readings make gold attractive again as a hedge against currency devaluation, especially at a time when bonds and equities are under pressure. 2. De-dollarization is accelerating. Central banks across the globe are moving away from the US dollar, and gold is quickly becoming their preferred alternative. Countries like China, Russia, Brazil, and India, key players in the BRICS alliance, have been accumulating gold reserves aggressively, setting new central bank buying records in both 2023 and 2024. By diversifying their reserves away from dollars and euros, these countries are reducing their reliance on Western monetary systems and boosting demand for gold. 3. Geopolitical risk premium is rising. Geopolitical tensions have reached a boiling point, with escalating conflict risks, unstable trade relations, and growing uncertainty around US-China dynamics. The recent trade standoff, new tariffs, and currency disputes have only heightened global anxiety. In such uncertain environments, gold becomes a go-to asset because it isn't tied to any single economy or political system. It's one of the few assets that historically performs well during geopolitical crises. 4. Loss of confidence in the Fed. After years of swinging between easy and tight monetary policy, many investors are starting to question the Federal Reserve's credibility. Inflation remains stubborn. The Fed is stuck between cutting to support the economy or tightening to preserve purchasing power, and markets are betting on one thing while the data points to another. This erosion of confidence in central banks, particularly the Fed, has always been a bullish catalyst for gold, as investors seek out assets that don't rely on monetary policy. Historical context. Gold during crisis. Gold's recent run is not unprecedented. In fact, it closely resembles past periods of global and monetary crisis. In the 1970s, gold skyrocketed from $35 to over $800 an ounce during the stagflation era, when inflation surged and growth stagnated. In 2008, following the financial crisis, gold dipped briefly but then soared as the Fed launched quantitative easing. And in 2020, during the peak of the COVID crisis, gold again hit new highs as stimulus packages expanded balance sheets across the globe. The 2025 rally combines elements of all three eras: inflation, instability, and growing distrust in fiat. How to invest in gold right now? If you want exposure to gold, there are several smart ways to do it, each with pros and cons depending on your strategy. Physical gold. You can buy gold coins and bars which offer direct ownership and zero counterparty risk. This is great for long-term holders focused on wealth preservation, but it does require secure storage and insurance. Gold ETFs. Exchange-traded funds like GLD and IAU offer a way to track gold prices without dealing with physical storage. These are ideal for traders and investors who want exposure with high liquidity. Gold miners. Companies like Barrick Gold, and Newmont Nem offer leveraged upside. When gold rises, miners often outperform due to profit margin expansion, but they also carry higher volatility and operational risk. Royalty and streaming companies. Stocks like Franco-Nevada, FNV, and Wheaton Precious Metals, WPM, offer exposure to gold production without owning or operating mines. These businesses receive a cut of production revenues, often with lower costs and less risk. Tokenized gold. If you're in the crypto space, you can access gold through blockchain-based assets like Paxos Gold, PAXG. These combine the benefits of physical gold with the flexibility of digital assets and are gaining traction with Web3 investors. Recap Gold has broken out to an all-time high of over $3,228 per ounce, fueled by rising inflation, global de-dollarization, geopolitical stress, and weakening trust in central banks. This rally isn't just a reaction, it's part of a growing trend of investors moving toward real, tangible stores of value as fiat systems wobble. There are multiple ways to position yourself in gold, whether through physical bullion, ETFs, gold miners, or even tokenized assets. The key is to understand your risk profile and time horizon. Do you think this is just the beginning of a gold supercycle, or are we nearing a peak? Drop your thoughts in the comments. I'd love to hear your take. And if this video helped you think differently about where gold fits in your portfolio, hit that like button, subscribe for more investing breakdowns, and don't forget to check the description for my watch lists, tools, and a link to claim a free stock on Robinhood.